Our main primary company is called Elevation. And we actually like to call it property redevelopment. I don't love the term fix and flip because I think unfortunately there's some really bad investors that kind of gave it a bad name. Not to say that, we're perfect, but we really try to take pride in what we do. So, but essentially we flip houses. We also wholesale, and we actually call it transparent wholesaling because that's another term that doesn't have the best connotation. We also have an institutional division. From 2021 to 2022, we helped one large institutional client acquire 2 single family rental properties in and around Metro Denver. So we got really good doing that with 3 real estate agents that were a part of our team. And then this past year, we've sold off 35 properties for a different institution. So luckily, they didn't see this huge writing on the wall and say, hey, we need to dump everything. They just strategically probably wanted to raise some capital, had some, headache renters and said, let's just dump some of them. So that's a division. And then our other division is the education division. So we teach people how to flip. It's, again, another passion of mine. I primarily teach the course. It's called the Elevation Academy, and we do that quarterly. Our main primary company is called Elevation, and we do that quarterly. Welcome to the Cash Flow Fight Club podcast. Today, we're thrilled to have real estate empire builder Derek Marlin in the Champions Corner.
Derek is a real estate powerhouse managing over 150 million in sales and leading the Elevation Academy to teach others the art of house flipping.
From his Wall Street roots to building a thriving real estate empire in Denver, Derek shares insights on scaling a business, house flipping strategies, and empowering others through education.
Listen in for powerful advice and inspiring insights that you won't want to miss.
And if you're interested in getting started in the best kept cash flowing secret in real estate, check us out at flippingdirt.us. Let's do the show.
Let's do it.
Derek Marlin, welcome to the Cash Flow Fight Club podcast. We're excited to have you on and chat about real estate and life in general.
Yes, Derek, welcome.
Absolutely. Thanks you guys for having me on. I'm really excited to be on the show today. Thank you so much.
Yeah, you bet.
Well, we typically start things off just a little overview about who you are, where you came from, any highlights you want to point out, and then we'll get into what's going on in today's world. Yeah, absolutely. So I'll give the edited version because my stories can wind around, but I think hopefully that your audience will actually enjoy that because it'll show that people can do lots of different things and end up in real estate. So originally from back east and grew up on a Wall Street family. All my family worked on Wall Street, primarily on the fixed income side. So they weren't stockbrokers. They were mostly bond men and women. At some point, supposedly there were 50 Marlins in the bond business at one point. So grew up in that mindset, in that household, which made for interesting Thanksgiving and Christmas dinners, to say the least. Moved to Denver in the 80s, grew up in Denver for a while. So it was crazy to see Denver in the 80s, and then went to high school in Texas and decided I wanted to be somewhere out west. I was not a fan of Texas other than playing some high school football. That was fun.
Did we talk about that before? Where in Texas did you go to high school?
So I lived in a town called Grapevine.
Yeah.
So right by the airport, like right in between Dallas and Fort Worth. And I went to Grapevine High School, but we played sports all over the
I was born and raised in Fort Worth, so super familiar with the area.
I used to actually be in nutrition between undergrad and graduate school. I ran GNC stores. And so I actually ran the GNC store, and back in the day it was called Hewlin Mall. I don't even know if that's there anymore.
I think it is, but mall in general aren't too much around here. I went to high school in Arlington, so I'm sure we played each other. I don't know what time what years you were playing football, but we were playing
that's
each other's school for sure.
I love football for Texas from a football perspective, but wanted to get back out west. And so my only really requirements for college was business degree of some sort and skiing. And started my adventure going to check out schools in Montana. And I went to a school in Bozeman and just loved canceled the rest of my trip. I went to Montana State University in Bozeman, ended up getting a marketing degree. I went through the gamut of a bunch of different, aspects of business and ended up really enjoying marketing. And then I changed course. Instead of going into finance like my whole family wanted me to do, I said, I want to work in professional sports. And everybody thought I was crazy. So decided MSU, unfortunately, is not the place to be, especially it was fun. I think our high school football team could have beat the Bobcats back in the day. So transferred and then went into sports marketing. So I got my MBA in sports marketing from the University of Florida in Gainesville. And that's what actually brought myself and my family and my wife back to Denver. So we came back to Denver 2002, did sports marketing for 6 years. So I worked for the Denver Broncos and did corporate sponsorship sales. This definitely dates me. We were there 1 year after the stadium opened. So we used to call it the new stadium, air quotes, which is crazy. And did that and then got into media. I loved sports, but they know you're like a player. They have a line out the door of people that are willing to do your job for less and work lots more hours. And so I really enjoyed it, but I got hooked on the media side. So did that for 7 years. And I sold television advertising during all the sports programming on CBS television. And that's really what brought me to real estate, actually, is I ended up getting with one of my fellow sales executives and I gave her a hard time. And her name's Diane. And I said, you are not here as much as us. You don't look as stressed, drive a lot nicer car. Like, what are you doing? Because this was actually during the housing crash and the economy was good. This was 2008, 9, 10. And so she coughed it up and she was buying turnkey rental properties. So that's actually what got me into real estate in 2008 and 9.
She was doing that on the side.
She was doing that on the side, and she actually ended up leaving 2 or 3 years later too. She's like, I'm doing so well. She was buying everything she could. She was about 10 years further than me in my career. So I think she had a lot more capital and even went and raised private money and just bought as many rentals as she could. So 2009 through 2013, I acquired 2 fourplexes, a duplex, and a single family, and still did that during my corporate days. And ironically went back to Wall Street for a little bit, but that was the start of my investing journey. I still call it part-time because I was working, in a corporate job, but that in '09.
That's great. Yeah. Backside of the Great Recession, as they call it, I guess. So good deals to be had. It was
Wow.
a great time to be entry point, get into the real estate market. And you had a great mentor, it sounded like, somebody to show you the ropes along the way.
I was very, very fortunate that I had a mentor kind of day to day. And then I had another great mentor in my father-in-law. He's a investor in Montana and has been for almost 50 years. And so he was really nice. He let me struggle for a while. And I think I just saved everything I could, bought my first one. And I quickly ran the numbers on the down payment. And even back then, this will probably have your audience lose their minds, but we bought our first single family in '09 for $102,000.
Wow.
Yeah.
And we fixed up. It was a turnkey rental. It was fixed up nicely for a rental, had a renter in it, great property over by Fitzsimmons Hospital in the VA in Metro Denver. And then he said, you know what, I've got a line of credit that we can draw on for down payment money. Let's buy whatever you're comfortable taking down. So we partnered up together, bought those 11 properties together, 11 doors together. And then I just paid him back with my half of the cash flow and woulda, coulda, shoulda, we should have bought double, but it was a great entry into the market.
Yeah, timing is so important in many aspects of. In terms of your finance career on Wall Street, that's incredible. You have such a deep family legacy there in terms of finance. Has that I can imagine that's helped you quite a bit in your real estate venture and just understanding the lending environment and how to work certain financial products and such, or is there other aspects that you carried into real estate from there?
Yeah, that's a good question, Mike. I think it helped me directly at the time of entry. And now I'm seeing it almost, 15 years later that we actually use it more on a day-to-day basis as well. But by getting in, I ended up then getting sucked back into Wall Street, as I call it, with my dad. He had just retired. I was tired of the corporate world. And so he said, hey, let's start up our own boutique municipal bond trading company. And so he was the trader and I was the salesperson. And so I ended up having to got out of the corporate world with CBS and got my Series 7 securities license and my Series 63 security license and was actually studying for my registered investment advisor license. And that just helped me, you're right, understand the debt side of things so much more efficiently. And whether it's good or bad that us as individual investors from a stock and bond perspective or even real estate, nobody likes to admit it, but really institutional money moves the market. I mean, even though it's a smaller percentage, it's so vast and it's so fast to move versus traditional residential real estate. So I think it helped me become a better investor. And then we'll probably get into it later in the episode, but one of our divisions at Elevation, our company day to day, is we now work with hedge funds and institutions and we source and buy single family rentals for them. And then we've done some selling. So I think us landing that luckily large account as a client, I think my background had to help because I haven't come across many people do what we do on a daily basis that have that investment background. So I think worst case scenario is even had I learned nothing, which I did, which was great, we landed a great account that kind of changed the trajectory of our business.
Yeah, let's definitely start stepping toward that. So from '09, it sounds like up into the mid-teens, you were making some acquisitions exclusively in partnership with your father-in-law, or yeah, and were you guys just, was it an informal arrangement or a formal arrangement? Did you guys form a like a JV company or anything like that?
Yeah, we definitely did, and that was a great piece of advice that I got from my real estate attorney is, everybody has the best intentions, especially with family, but we all know that can go sideways really, really quickly. So, on both respects, I started with my father-in-law, and then I actually sucked my dad in. He full-time retired, got out of the business. He still trades as a accountant. He's still very, very involved, but he and I bought a fourplex as well. And so, yeah, everything was done with operating agreements. Everything was done with LLCs. It really, really was good, and it honestly was a blessing in that my father-in-law and I still did a lot of deals together and had a great experience. We ended up selling a lot of those and moving to another market, so we scaled up and started buying multifamily in Cincinnati, Ohio.
Mhm.
So that corporate structure was integral in keeping the ball rolling in a positive and professional manner.
Mhm.
And then my dad and I, the way that I got into flipping properties is we both were working, in this boutique brokerage. And, we had a rough go in certain aspects of trading where the bond market, it's called a whipsaw in that type of the sector of the market, just turned on us and we lost a bunch of money and we had to exit out of a position. And I finally said, let's just stop this. Like, this is not fun. And we lost a bunch of money at one point. And so we got into investing full time. And he and I did that, which was great. But then life circumstances changed. So they decided to move out of Colorado. They have a second home in North Carolina, and that's now their primary residence. So it was great. I essentially was able to buy my dad out, have him retire, and sometimes he'll invest in our deals, sometimes he won't. But it's having that corporate structure, and it seems formal, but I just seen too many things go sideways very, very quickly.
Yeah.
It's such an important lesson, but as you mentioned, especially with family. I think we flip it many times where we think, oh, I'm engaging with family. For sure, everything's going to be on the up and up. But it makes it even more awkward sometimes to touch on what can be seen as touchy topics. Money, especially, is hard. But yeah, just I talk to people many times, and the same advice comes up. When you're dealing with family, we have family that have rental properties, and they rent to one another even, and think, oh, I don't need a contract. They're going to be great tenants. They're going to, take care of things, and it really muddies the water and allows, if you have that structure in place, and when you have that structure in place, yeah, it can be very cut and dried. Not that you can't circumvent some cases if you want to, but it at least provides that structure such that there's no question, and it avoids some awkwardness around the dinner table. It's, well, when you get together. Yeah, I love that.
Well said. Absolutely.
Okay, so you guys did that. How did that transition into what you're doing today? So understanding there's probably several iterations and steps along the way, but you went from, I don't know, a small family venture, buying properties, and I don't know if you guys were leveraging debt and or just using. I'm assuming you had to leverage debt in there somehow. But what was the spark, or how did you transition into a more formal real estate enterprise?
Yeah, it's interesting that you asked the question that way, in that it was something where we had time because the market closed, 2:30 Denver time. And so more as a supplement, I got into flipping properties. I said, you know what, rentals are going great, but I wanted to make more money. And during that point, like I said, we, got our asses handed to us. And so I was like, I got to make actually some side money in the event I pay this back. And so we started flipping, and I actually just fell in love with the process.
Really?
So even though I think I freaked my wife out really badly because I am marginal at construction, I'm slow. Luckily, I came right out of the gate and said, I will hire everything out. Will do nothing. The only thing we did to start was demo. And when I hired my first employee, my first project manager, he's this, super strong CrossFit guy. He's 15 years younger than me. And we think, oh, well, we'll just call it a workout. And he fell through a wall and I stepped on a nail, and I was like, we're not doing this. This is a train wreck. This is just save $500. We're going to hurt ourselves. We barely have insurance. Like, this is a terrible idea.
Not the kind of
And
workout you were looking for, right?
it was not. And I still give, his name's Al. It's a hard time because he thought, oh, well, I'd pay to do this at a gym. It's like, no, we should not do this.
Mm.
But what really got us into full time is I actually loved it, and I still like it. I mean, we were scaling up our business. I'm sure we'll get into more kind of what our staff structure is and what we're doing, but I still really love real estate. I know a lot of people like the lifestyle that it gives you and like the ability to earn nice chunks of money if you're flipping, or of course build wealth through long-term asset holding. But I actually still love the real estate side. I still want to, have a team to help run it, but that got us going. And so we started in 2015 doing flips, and we just didn't know how lucky we were with the trajectory of the Denver market. And it just started to go so well that we shut down our bond brokerage and said, no, let's do this full time. And then did that for 2 or 3 years with just myself and my dad. And then in 2018, I started to build a small team gearing towards where we're doing it today. So it's just, it's still a passion of mine.
Yeah. I love that. I mean, that for us as well, we love to dig into the passions and the drivers and things. What specifically about it? You said real estate, which is broad, but what specifically really pulled you in? And did you, when you say you love it, is it the deal analysis, just the different aspects of renovating something, or kind of what is it that draws you? Or
Yeah,
you?
I would answer it this way, in that I didn't know how much I actually like the deal analysis side. I thought this is a great way to make money. There's great tax advantages to this. We learned, I had no experience in real estate before this. So I just took every course that I could to assimilate our current investment model. So I really like the deal analysis. I still love the analysis. Now I love blending the real estate with how to actually run a business. So, when I actually teach this, and now we have this thing called the Elevation Academy where we teach people how to flip. And so in our courses, we actually say, as much as it looks sexy on HGTV to see someone wandering around Floor and Decor and creating mood boards and whatever else, like I don't fall that far on the design aspect. Like I still want a well-oiled machine. Every day is a dollar, or lots of dollars if you're borrowing hard or private money. So I love the analysis. I still really like the design aspect, and we've tried to live in both worlds, in that we don't want to reinvent the wheel. We have 6 different ways we finish out projects, and then we rinse and repeat them every single time. And then we change that once a year. So I'm trying to nerd out on the system side, but still have great design elements. And then we try to pick 2 or 3 areas that are usually under $1,500 or less. And we just call them unique design areas, meaning, hey, if we can do a cool accent wall, or if we can open up one wall to make the floor plan flow better, or, maybe in one property, we might put a second egress window because it's a higher end price point. How can we get significant bang for our buck? But everything is still rinse and repeat. So I love the system, but I still do like the design. I like taking old, disastrous houses and bring them back to life, because most of what we buy is pretty trash.
Yeah, there's something really compelling about that. I think just when we think of the flipping industry, be it single family homes or even larger projects, it really, I think there is something about the transformative process. We talk about it. I mean, we do land, we do no
Yeah.
value add. We purely buy it and then flip it. And so, this year we've been interested to do a little bit more value add type projects where we can exercise that part of our, creative minds and get in and do some things there. So I do think that's a draw. I also resonate with you that I like the business aspect of things, how you can take a business and not totally automate or systemize it, but put in, like you said, you've got 6 designs, and you go and then you iterate those annually, just with trends or however it is. But you can make it efficient without totally sacrificing any personality in there. So those are fun things for me as well.
Yeah, absolutely.
Derek, you mentioned that back in 2018, you brought a team together. Do you mind elaborating a little bit? How did you structure your team in the beginning, and how did you make sure to find the right people that you can partner with?
Yeah, Lucia, that's a great question. I decided to start with project management. And the reason was twofold. One was that I still love sales. I'm passionate about sales. It's one of my, we call it circles of genius, like where do we spend our time? So I figure, you know what? It would have been great to replace myself, as they say, when you try to scale a business, but I just thought I can only do so much. And I'm okay at project management, but I'm definitely not great. Couple that with the gentleman that I mentioned before, Alex, is a guy that I actually knew from Montana State University. He was much younger than me, and he had a industrial and organizational engineering degree and background. And so I gave him a hard time. I'm like, okay, you know how to create the system and exponentially better than me. And he was moving back to Denver. And so it was the stars aligned with the right person in the kind of the sector that I felt like we needed the most help. And that was hugely, hugely helpful. And then from there, our next hire was an acquisitions manager. So I did need to definitely, lever my time better and help with somebody who can help source deals. And then they became a licensed real estate agent and she ended up selling our flips on the back end. So those are my two first hires, is really checking that project management box in that acquisitions and dispositions box for our first two folks.
And how's the company organized today? You teased it earlier, and I'm thinking maybe two levels. Just one, your enterprise, kind of what lanes are you focused on? But then, yeah, maybe the team underneath it. And
Sure. Yeah. So I'll give an overview of the company overall. So our main primary company is called Elevation. And we actually like to call it property redevelopment. I don't love the term fix and flip because I think unfortunately there's some really bad investors that kind of gave it a bad name. Not to say that, we're perfect, but we really try to take pride in what we do. So, but essentially we flip houses. We also wholesale, and we actually call it transparent wholesaling because that's another term that doesn't have the best connotation.
Yeah.
But what we like to do is we can handle between 4 and 6 properties at once with our current capital structure. And then after that, I either need to go out and raise private money, which I'm not opposed to, but I just haven't done yet. Or what we like to do is then just sell it to our fellow investors. And we like to sell them good deals, and it's deals that we've vetted ourselves. So we don't do this monstrous amount of wholesaling. We're trying to build it, but we definitely wholesale to other investors. We also have an institutional division, like I mentioned before. So we helped from 2021 to 2022, we helped one large institutional client acquire 2 single family rental properties in and around Metro Denver. So we got really good doing that with 3 real estate agents that were a part of our team. And then this past year, we've sold off 35 properties for a different institution. So luckily, they didn't see this huge writing on the wall and say, hey, we need to dump everything. They just strategically probably wanted to raise some capital, had some, headache renters and said, let's just dump some of them. So that's a division. And then our other division is the education division. So we teach people how to flip. It's, again, another passion of mine. I primarily teach the course. It's called the Elevation Academy, and we do that quarterly. And then our current structure from today is we have a project manager still. We have another gentleman. His name's Travis. He's our senior project manager, and he's phenomenal. He runs all of our projects for ourselves and for our clients. So we will consult as well. So we'll teach you. And then if they want hands-on training through a project, Travis will help run it. And then we've got a sales manager, Adam. And so one of the changes we made over the last 2 years is I could only manage so many salespeople myself. And so we found a great person who had experience managing a team.
Yeah.
So now we actually have a brokerage division. My wife, Ann, is our team lead. She's a licensed real estate agent, and we have a team at eXp Realty. So instead of owning our own brokerage and doing our own thing, I wasn't worried about having our name on the sign, if you will. It just made so much sense to be with actually the largest brokerage right now in the country, eXp. So we have 8 agents that work on the Elevation real estate team, and they focus primarily on investment real estate. They'll do some friends and family deals, but it's mostly investment real estate, finding our properties, finding our clients' properties and selling. And then I'm actually recording from our office. We own a co-work space called the Broadway Collective. So that's a different company. My wife, Ann, runs that. She's the genius behind that. So it's a real estate centric co-work space in Englewood, Colorado. So right now we only have 3 full-time staff, and then we have 8 agents. But the way I like to try to scale too is we have a lot of super smart outsourced professionals. So I have a fractional CFO that helps us with finances. I have a business strategist. I have a bookkeeper, and I have an amazing attorney. So definitely we're not big enough to have that all in-house, but I think that's key to have those really smart professionals, especially the bookkeeping side. I think people spend so much time doing their own books, and who loves accounting? I mean, maybe some people do. I don't. So I'd rather have a smart person do that.
pain point on our end for sure.
Really.
That's awesome. So quite a few divisions, I would say, to your, if that's how we want to refer to them. Do your full-time and some of your even outsourced, do they interweave between those, or are they pretty focused? I mean, the agents obviously are in one domain, but the others, are they somehow working across divisions?
Yeah, good question, Mike. They really are very, very intertwined. So perfect example is project management. Travis, our project manager, he will put the final rubber stamp on an agent's analysis of a deal, looking at the level of rehab. We've got some quick analysis tools and spreadsheets to say, are we close? Do we need to write an offer? But then before we 100% move forward and our earnest money goes hard, he will rubber stamp the rehab budget. And then vice versa. If we come across a deal, we send it over to our sales team. We do have agents that have specialties, and some people love the the institutional and almost like a Wall Street analyst side of real estate. And they really do not want to be out knocking on doors and pounding pavement trying to find deals. And then we've got the opposite of folks that love sourcing deals, and you couldn't pay them to have to deal with a very high demand client that's doing tons of volume and needs stuff at 9 p.m. East Coast time. So different skill sets for different folks, but everybody interweaves a lot. As much as I'd love to have a little siloed, right now we're still definitely a small company.
Yeah, it gives it a small company feel in that way. There's a lot of things going on. And are you guys all or primarily in the Denver metro area? I know you mentioned, I think last time we spoke about Colorado Springs a little bit as well, but in Colorado at least? Or
Yeah, Colorado is our main bread and butter. Metro Denver is probably 80% of our business. We have done some business in the Springs, primarily from that hedge fund client because a number of their properties were in the Springs. I would love to flip in the Springs. We just haven't had. We were helping or hoping that the hedge funds would drag us down there, and then we'd have this great boots on the ground presence to then flip. But we haven't flipped yet, so we'd love to expand to Colorado Springs. We just need the right partners. And that's the cool thing about what we're doing with DXP is somebody could either truly be, even though a 1099, kind of an integral part of our team, or we can work side by side with people and really help them learn the investment business and they can still have their own team. And then the same thing with Northern Colorado. We've done a couple deals in Fort Collins. I can't afford Boulder is my cheesy joke. Like it's just too expensive for us to, I don't have that deep of pockets. And then we're creating affiliations across the country. So we just brought on our first partners in the Dallas Fort Worth market, some great guys that are phenomenal investors. We're teaching them and helping them add on the brokerage component. And so we're creating what we're calling the Elevation Investor Alliance. So we're slowly starting to organically look for just other really sharp people across the country that we can create our own network and hopefully refer business back and forth or training back and forth and best practices rather than like, oh, I want to franchise Elevation in all these different areas. So we're slowly starting the rollout. So we just brought on DFW a couple months ago and it's been going really well for those guys.
and as an aside, who is that?
It's a company called the Home Buying Guys.
Okay.
They are just awesome down home Texan, like the best part of Texans, like super warm, super inviting. I met him at a conference. I was sitting next to him and at the first lunch break, he just goes, all right, get in the truck. You're coming to lunch with me. I'm like, okay, and then we became friends and we've done business back and forth. We've wholesaled back and forth. Super sharp guys that do a lot of what we do as investors. And now they're adding on that brokerage piece of it.
I'm very intrigued and I would love to hear more about your educational program. How is this structured? For how long? And anything that you want to tell us?
Yeah, absolutely. It came just out of, I didn't piece it together until actually my business strategist said, you've been grooming yourself for this. You just didn't know it. And so in undergrad, I actually was a teacher's assistant. And then in graduate school, I was a graduate assistant. And I really actually enjoy still learning and teaching. And it makes my kids who are all teenagers, we've got one in their freshman year of college and two in high school. They are so mad that I tell them you still need to learn and you still need to become a more intelligent person. I think they think they're done right when college is over, but I just love it. And then I just saw so many people teaching, but not doing. And so to me, 85%, maybe even 90% from a revenue perspective is doing.
Yes.
And then 10% is teaching. So I'd like to grow that, but I'll be the first to say that this is what we did. This is, a deal where we lost money. We missed the mark on this. Like everybody talks about these great HGTV success stories. Everything's gross, nothing's net. Like it just drives me crazy.
Yeah.
And so from that, we created the Elevation Academy. And so it's a quarterly seminar. It's one very intense day from 8 a.m. till 4 p.m. And we teach people every step of our system. So it's how to source deals to make sure that you're not completely reliant on a crappy wholesaler or just the MLS or whatever else. It's analyzing them, like making sure they're actually good deals for you and your investment guidelines. Super deep on actually running the project. That's probably 4 out of those hours. And Travis spearheads that. And then selling it effectively. And then we've done 9 of these so far. And so we've created an alumni program. And now when people, air quotes, graduate, then they end up becoming part of our community. And every time we do a design update, we do rental analysis and rehab analysis updates. We send all that out to our clients. And so they get that on a recurring basis. And then they get first dibs at our properties. So it's like your front line for wholesale. And so it's very intimate. Like it's anywhere from 25 to a 45 person class each quarter. So that's been really really enjoy it. And we're just starting to build that.
In person?
It is. Right now it's in person. It'll be really interesting to see. I'm actually working with an AI consultant, and she's helping me harness the power of AI to create a virtual academy.
Mhm.
So see how that turns out. I'm like halfway done with recording it. It is super cool and creepy all at once. Like
Yes.
it's, now I feel so old when I say this, but it's just mind blowing how much. If I try to do this on my own and record in a studio, it'd be 6 months. It would be exponentially more expensive. But I think we're gonna have a really cool product here by the end of the year, and we'll have it virtually.
Mhm.
And then we're trying to build out a community. And I can't remember if we talked about this off camera, but it's a platform called School, and it's spelled SKOOL. And just a great way to create a longer standing, very organic, much lower price point where people can just be updated on a continual
Yes.
basis. So we're creating our school community that we'll have ready to launch by early next year, so that people don't want to take the leap of one day, even though, we feel like the investment of $997 is well worth it for one deal or missing one mistake or getting one good deal. I get it. That's a lot for some people. So it's like, hey, how could, $50 a month or $90 a month benefit somebody? So we're just learning how to do that. But I still really love the education side, but it's always, we got to share, we got to be truthful. And then I think people hopefully can gain value.
I love that. We do similar in our land business. We about a year ago started coaching, and that as we can get into this on your podcast, but I went through a transition, but as I went through it, more internal exploring and trying to think about, what really energizes me out of life in my corporate career, it was coaching and mentoring and helping. And, as I've transitioned into an entrepreneurship role, I try to keep a lot of coaching and mentorship in present in either formal through, paid coaching type arrangements, or informal through mentorships and partnerships. But yeah, I mean, it is so rewarding to be a part of somebody's transformation journey and help them see things that they haven't done before and have success. That's yeah, I love that you're pursuing that.
Yes.
And there are so many ways to go about it. Different price points, different methods, different.
Yes.
I mean, yeah, the field is so wide open at this point.
And there's a huge difference definitely between virtual meetings and in-person meetings. But on the other hand, the virtual world really broadens your reach and breaks that barrier, location barrier, or even time, and helps, you can reach more people than you would if you keep it in person.
Yeah, that's well said. I mean, I do love in person, but I think you're right, Legia. Like we are missing certain people, and we can add value to people. So
Yeah.
that's why we're trying to figure this out and hopefully have the best of both worlds and
Yeah.
make it sustainable. I think that's going to be really, really neat. And then who knows, with people in other markets can get together. Maybe they've just taken our virtual academy, or they're part of our school, and they're both in Charlotte or wherever. That would
Yes.
be super cool to see them grow together. So no, we're just getting our toes wet, but it's been fun so far.
That's awesome.
You touched on, and we're talking a little bit about coaching and mentorship, and how do you, as an entrepreneur in real estate, and you're fairly seasoned now. I mean, definitely you've been in the game 15 years or so in some fashion, but who are your influencers, or how do you go about keeping your skill set sharp in specific the discipline, but maybe even more broadly as an entrepreneur?
Yeah, that's a great question. It is definitely some of that grassroots content. So I'm a big consumer of podcasts in general. So I
Mhm.
really like to listen to other people's podcasts. And that's been the fun thing. And it's been so fun to be on this one. And super excited to have you guys on ours. That pod swap, is such a cool thing. It's something I didn't even think about. But another crazy story where I recorded one of my episodes yesterday. And there's another gentleman who's a very kind of prominent hard money lender in Denver. And we've known of each other forever. I even went to one of his early, they call it the Investor Success Summit, and it's very kind of an entry level thing to get people going. And I went to that in 2008 or nine when I was working at the Broncos, because it was in the parking lot at the PPA event center just north of the stadium. And we never met each other. And then he reached out and we finally got together 15 years later or whatever. So I definitely try to look at other folks and what they do. I'm still a voracious reader, so I really try to read. It brings up an interesting kind of conundrum for me. So I've got some great day-to-day mentors. I'm personally still trying to figure out, how do I add enough value to somebody who's significantly further along than me to have them be my mentor. I don't really feel like I have a mentor right now. which would be a super cool thing. So I'm still trying to figure that out and find the right path. And I think something that's interesting is not to say you shouldn't surround yourself with your peers, but you should have that person who hopefully is way further down than you to say, this is a great path. You should just think of it this way. And I don't have that yet. So I'm still looking and I'm still trying to make those connections and reach out to people. But I always try to lead with value. The thing that drives me crazy, and I'm sure you guys find this, is I will be there to help people. But when people say, I just want to pick your brain or buy you coffee, I have a really hard time with that. And so it's like, just bring value and then things will organically happen. But the way I went to another training thing, I did do some personal development with the Tony Robbins organization, which was awesome. And his thing was, really wealthy people can afford their own coffees, their own lunches, and they're really short on time. So like, we've got to figure out how to bring them value. They're just not going to, out of the greater good, or else they'll never get anything done.
Yeah. A $3 or $4, $5 coffee is not.
And you can pick my brain, but
Here.
it's not worth just a cup of coffee. It's
Yeah,
yes,
I
but I think we get really caught up in these trendy phrases. Like I used to use that, oh, I would just love to pick your brain, and until I really thought about it, like that's not okay. People's times and people's knowledge are worth
Generosity.
Exactly.
A little bit.
Yeah, you bring up a great point, Ligia, that you're right. It's just how you frame it. If you would go to that person and say, I listened to your podcast. I don't know if you've thought about this, but it's something I'm just throwing out there that might be valuable, or here's a connection that might be valuable to you.
Yes.
Does this help you? And then ask after that,
Right.
versus let's just go to coffee. So I just think it's how you frame it.
Yes.
People are usually giving. It's just how that comes down the pipeline.
Very true.
For sure.
I do have a question. It might be, I don't know if it's in your ventures, in your endeavors, you have to cut this.
Endeavors.
Endeavors. This is English being my second language. Sometimes I struggle.
Oh, I'm impressed. Oh, you're doing great.
Do you guys accept private investors?
That's a great question. I've gone back and forth multiple times about accepting private investors, and I haven't done it so far, but it's actually really been pushed to me by my CFO. Is he had the greatest, I think, explanation of why we should be open to it. And so we are leaning this way in the future. We have done, I think, a decent job with our marketing of sourcing properties.
Mm-hmm.
And one of the unique ways that we find properties is we will actually partner with homeowners and we will flip the house for them, where the homeowner brings the home to the table. We fund the renovations, we manage the renovations, and then we split the extra profit that we generate 50-50. So it's actually called the elevation partnership flip. But we've never really advertised that or screened that from the mountaintops. And so he said, if you turn on that marketing machine, I think you'll have more interest than you know what to do with, and we'll run out of capital. And so we would either be turning deals down, or yes, we could wholesale them. So we're actually in the process of evaluating a small fund so that we can turn on the marketing machine and then be open to more business and doing more of these partnership flips. And so I haven't done it yet. I think from your question earlier, Mike, of like my investment background, I know how important investor relations is. I know how intense the SEC is. Like, you have to have your ducks in a row, or else you're going to be in a world of hurt, both financially and legally. So we're looking for the right partner, quite frankly, of who can manage investor relations and managing investors from an updating standpoint, and then we'll run the business. So I guess I'm looking for the right partner potentially. But yeah, we're very open to that. And 2 or 3 years ago, I'd say, no, we're good. We're doing great business ourselves. We're slowly growing. But now I just feel like we're probably leaving a lot on the table and we need to be smart about it.
Mm-hmm.
Yeah, I wanted to make sure that we touch this because there's so many people that hear and they don't want necessarily to be actively involved in anything. They have a full-time job maybe and they want to keep it, but they would like to have these investment opportunities.
Yeah, passively.
Yes.
Yeah. And maybe, maybe it's the universe telling me this, but it's ironic you say that because we just came across one of our flips and we probably would have been stretched a little thin with our internal company capital. And so what we ended up doing, instead of just classically wholesaling it, one of actually our sales manager had a prior relationship with an ultra high net worth individual. And we essentially brought him and his wife actually the deal and said, here's our acquisition fee for finding it off market. Here's our general contractor and management fee for running everything. And then our team will sell it for them on the back end at a discount. and then you get to keep all the return. And so he honestly didn't believe the returns we could generate because he's a true cash buyer. And so we actually start our project here in the next week or two with this individual, and he loves it because he wants nothing to do with it. I mean, they fly all over the world. They're in New York as their home base, but I think actually as we record this, he's in Turkey for a month. Like they're flying all over the world, and he just says, "Yeah, give me access to your Google Drive." And we're very systematized in how we run everything on software called money.com. So we have an under over bet of how much he'll actually check, but we want to make it super dialed. So it's like, that's a cool first foray. And then how do we do that at scale? Cause it's enjoyable. And I'm so passionate about knowing what is important from an investor relations standpoint. We're just figuring out what's the right move for us in the future.
Yeah, it's a great way. It's a great approach to cautiously step into that. We've done a few syndications on larger multifamily properties, and yeah, SEC compliance, the legal framework that goes behind it. There's a massive amount of work that, at least in that space, is done, and it's fairly costly, such that when you're buying a $5 or $10 or $15 million multifamily property and you're bringing in maybe $4 or $5 million in capital, it supports some element of that. But yeah, once you get down to a different level of scale, investing in that level of compliance and legal framework can certainly be tricky. So yeah, I can appreciate the slow caution that you're putting into that.
Yeah.
So we touched just a minute ago on influencers, mentors. You mentioned some Tony Robbins development. What other kind of things do you do personally to keep your mindset in a good, healthy place as an entrepreneur, to stay motivated, to stay positive, to I don't know if you've been through any lows, but to, go through the highs and the lows? There's specific habits that you practice or different behaviors?
Yeah, I love that question because I'm trying to get back to that literally as we speak. To your point that you can go through highs and lows as your business, and then I feel like that will dictate your mood, that will dictate your outlook. And so, perfect example is I personally work best super early in the morning, and it's funny because it stemmed from when our son was born. He would wake up at 4:27 all the time, and so my wife was amazing at like getting him going in fed and back to bed, but I was like, I should just get up. And so I ended up becoming a really big morning person. And so what my most productive days are actually is working from roughly 5 a.m. to 8 a.m. at the kitchen table. And normally I actually do not like working from home. Like I've got 3 teenagers. There's a lot of distractions. My wife's super busy professional as well. But those 3 hours essentially before they get off to school, I can get so much stuff done. And then I'll go to the gym. Exercise is super important to me. So I'll get a good workout in, and then I'll show up at 10:30. And so I used to feel guilty about that, but I've finally gotten back to that lately. And I'm like, I'm so much more productive. So I do that a couple days a week. I really love that between, getting going. I still, again, I love to read. So I try to read as much as I can, but I had a cool little change in my reading patterns before. It was almost a badge of honor of like, how much could I consume and how much did I feel like I was filling my brain? But then I felt like I got too scattered.
Yeah.
And so last year I did a fun thing where I picked 5 books and I read each one of them 3 or 4 times. And I actually did it. And so instead of just going for the next one, and I'm in my office now and I've got 50 or 60 books at my discretion, but I actually have my 7 or 8 really go-tos that are actually truly resources behind me. And I've read all of them anywhere from 3 to 5 times. And that's been a cool little shift that I've really enjoyed. So yeah, still reading, getting a ton of exercise in as I can, not the best at it, but trying to eat clean. I mean, it sounds crazy, but being in my 40s, like it's so important and it just affects my health and my mood and whatever. So the way I say it is it's easy, or excuse me, it's simple, but it's not easy. So
Right.
just those patterns help me out a ton and trying to keep that morning routine going.
Yeah, it's really important as an entrepreneur, I think, especially because we have a lot more freedom of decision-making time, all that kind of stuff. It really, those routines and discipline and consistency really help tremendously. What's a top book or 2 that is in your stack that you can recommend?
Yeah, so I'll give a couple different ones. The one that I love from more of an operational standpoint, and I've probably read it 6 times now, and it's been really fun because I actually still physically like to hold books. I don't read them digitally. So I've got notes and iterations from all these different, times in our business. So one is called Traction, and it's by Gino Wickman. And the system he created is called the Entrepreneurial Operating System, or EOS for short. And I think that has been hands down a key to our growth as a company is trying to operate. And it was a joke I had with my first project manager coming out of two really great corporate jobs. I said, I want to run this company of two, just like we're a Fortune 500 company. So we'd sit down and we'd have, our staff meetings on Mondays. We'd have sales meetings. The cool thing about that is they have a document in that called the Vision Traction Organizer. And it's just a 2-page document. It's not overly involved, but I actually think it's something I do to plan out the upcoming year and then I address it quarterly. I think that's honestly more tangible and hands-on beneficial than my entire MBA of launching a business and running it day to day. Again, I'm not running $100 million corporation or whatever else, but traction is amazing. And then a new one that I've read, I put it in my rotation last year. It's by a really good influencer. His name is Dan Martell, and he wrote a book called Buy Back Your Time. And that one's been great. I've, again, put it to use. It's very functional for both personal development, for business development. He's a big, fitness guy too. So those are two really good books that I think people can get a lot out of.
Are you a Dan Sullivan fan and or follower or strategic coach? Yeah.
I am. Yep. I've definitely have read all of Dan Sullivan's books and Darren Hardy's books. I really like that. I like the who, not how. I think that's really good. I think we can make it a badge of honor of trying to do everything ourselves. And you think you're saving money, but really you're just killing yourself and slowing your growth.
Yeah.
So yeah, Dan Sullivan's stuff is really good. I like all his stuff.
We've been a part of his strategic coaching program for a bit. And yeah, a light bulb just went off, I think, when you were talking about the book Traction and EOS. There were so many people in our cohort that were talking about EOS. And I was like, it was totally going over my head. So now I'm like, okay, now I think I know where that comes from.
Yeah, it's great. I would definitely check it out. Really, really good. And it's still very tactical. I feel like, I don't know whether they say in the book or maybe some other people I've talked to is that really can efficiently manage businesses up to 15, almost $20 million. And then when you hit that point, you probably need to look at another level of operation. But I mean, hey, good problem to have if I'm clearing 20 mil and I got to figure something.
I'll take it. Yeah.
I
Yeah,
really
yeah.
love the concept that you mentioned that you now pick 5 books and read them over and over. And just this idea of like really digesting instead of being books and knowledge junkie, because we can like have that tendency to just read a lot of books and want to, we feel like we get so much knowledge by just reading fast, but really digesting and going back and make sure that we really incorporate what we want in our lives.
I was thinking it was more of a reading comprehension problem.
You're right. Maybe that's it, is I just don't remember it. But that helps with that.
No, I'm rereading a book right now as well. And I have had that philosophy not too long, a couple of years as same kind of shift. I mean, I would see people post on social media or whatever, read a book a week, I'm doing this. And it's just, I have that tendency because I am a knowledge hoarder. I love to just consume knowledge. I mean, I will race through a book just to get to the next book. And I've had to intentionally slow myself down for exactly that reason, to just take time, digest things. Some books come with exercises, chapter ending things. And I'll be the one who will like, oh, I'll do that later. I'll do that later. And then, later never comes and stuff. So I really appreciate the slower pace of learning and absorption and are repetitive. So
Yeah. Well said.
I have a question, one that we get. I'm going to flip it onto you. So working together with your spouse, what's your secret?
Yeah, that's a good one. It's funny because both of us coming from sports marketing in the corporate world, and then my wife, bless her, she ran a very successful high-end wedding and event planning business. And so the amount of stress that I saw her go through, and she was an entrepreneur before I was, which was super, super cool. And so the way that we ended up actually working together is I lucked out. I sucked her in. I will 100% take credit for it, because she had just sold her wedding planning business December before COVID. I mean, just talk about crazy timing where, of course, the world changed. The event business just went to hell in a handbasket. So, and at that point, our kiddos were early high school and middle school, and she wanted to take a little bit of time off. She's worked since she was super young and enjoy being there a little more for the kids. And this hedge fund just came out of nowhere. And it's funny because it's a great story now. I was in really big trouble at that time, but it was Easter and my in-laws were in town visiting. And it was Friday night, and she was, had sold the business, and so she wasn't busy from a work perspective. And my in-laws are there, and she's like, "What are you doing? It's Friday night. It's 6 o'clock. Like, you need to get home." And I said, "I got this crazy email. It's from this gentleman that it doesn't sound like a real name, but they say, hey, we looked at your resume, we looked at your content. We like to acquire between 30 and 50 properties a month. Are you interested and can you handle the business?" And I'm like I'm responding to that guy. And it turned out to be our large hedge fund client. And so the way we ended up working together is the only way we could receive compensation is through traditional real estate agent commissions. And I was so busy, and she's a lot smarter than me anyways. So I said, "Would you get your real estate license?" And I'm like, "You don't need to do anything. Just get your license. We'll set up a company and then we'll build it out from a staff perspective." But then she jumped in like wholeheartedly, and her first year, she closed like 25 deals and was like rookie of the year and everything. Most people were like, "How did that happen?" And so we got together more out of necessity. But then where we now, essentially live, which is amazing, is we outgrew our office space. We did so well for that 2-year period. I'm like, we need to reinvest in some more assets. We just sold all of our apartments in Cincinnati. And so she found this co-work space, and she's got this amazing design background. So we just stumbled into having this great working relationship where she has this great design element. She created the Broadway Collective, our co-work space. It's so busy now, she manages it. I thought she'd be a little more involved in elevation, but she's slammed. We work 5 feet away from one another. So I'm very blessed. It's amazing, but I have to be super sensitive to not bring home problems, talk about work all the time. Like, we both really enjoy what we do. So we both have to really try to keep ourselves in check, especially during the hard times of like, let's go on a walk at night. And then you realize you're talking about work date again. So it's like, okay, but there's other things out there. So it's amazing, but we got to be careful because there's sometimes it's like, and I love it. So I could do it all day, but I need to not do that.
Yeah, that intentionality, that you bring in the relationship when you're like aware and intentional about how you spend your time. That's wonderful. Wonderful to hear.
Yeah. Thank you.
I'm curious if you guys practice this, but one of the things that I would say has bled from our entrepreneurship working relationship into our personal relationship is taking time annually or however long to intentionally plan goals and set direction and, 5 to 10 year goals and working backwards. I come from a heavy operations background from my corporate career, so that's like almost ingrained in me in the business world, but it's something that we practice as well on the personal side of things that I think is really, I really enjoy this part of working together with a spouse.
Yeah. I think that's really well said. And we need to my wife Ann and I need to get better at that there's times where you can just felt like you're trying to be as intentional as you want. You're trying to plan, but then you're so busy in certain aspects or you're in a growth mode. And like you said, Legia, it's like being intentional and stepping back. And I think something that we're trying to be aware of is, people call it work-life balance. I actually personally don't love that. I like to call it harmony, meaning it's
Mhm.
never going to be balanced, but hopefully
Yeah.
harmonious, and being open to when things pop up. Like, we just ended up sending our oldest son to college in Washington State. And we knew the kiddos are going to go to college. It's something that's important to us, but more importantly for their, social development as well. I have a feeling they're all going to want to go far away from us, which just makes us, but we're like, oh, you know what? We want to be able to have that flexibility from a scheduling standpoint and the financial resources to visit all of them,
Yeah.
because we got a kid north of Seattle. I got one daughter talking about Hawaii and another daughter talking about Paris. So we got to flip a lot of houses to like make all this work because I want to visit them
It's not
in
Paris,
these,
Texas, right? Not Paris, Texas.
not Paris, Texas. She is a little rock star, and she's talked about it since she was young that she wants to be a doctor and go to Paris. So I'm like,
Wow.
okay, we got to be able to visit you. So it's like
Yes.
these new life things that we got to be intentional, because if not, we'll just put our head down and we'll blink and one's already in college. And so it's like, it's going to go by so fast.
That's a powerful and wonderful why, to be able to just help them and visit them as much as possible and just see them succeed.
It drives us. I mean, Lidge is European. Her family all lives in Europe. And so we're able to fortunately go at least once a year. And we usually spend 4 to 6 weeks where we'll just go and spend time over there. And we'll get a really deep quality visit in. We can go to 1 or 2 places and see everybody. And then my family's in Texas. And so we'll, have to be, so that freedom and flexibility to be able to work anywhere, but also to not have to work all the time is really important. And it honestly drives us as well. I mean, we literally talk about that often whenever things start to get resistant or low points or whatever, like, okay, we got to turn it on because I'm not getting back into another W-2 job where I'm locked into a cubicle or somewhere. So
Yeah, well said.
it's good stuff. All right.
I,
Where go? Oh, you got something.
I
Go.
feel like our time gets so short. Like would probably love to talk to you for hours.
No,
I got
absolutely.
one more
And this,
avenue I'd like to explore is the future. How do
yeah.
you see real estate in 2025 and where are you guys looking to go?
I love this question. And I got something similar in my podcast. So I'm excited to get your guys' take
Okay.
when we record. But to me, it's also not only where do we think it's going, but hopefully what data are we using to help us make that decision?
Hmm.
Because I think it's important to go off of gut. And to me, I try to use that as the tipping point, but it's also trying to look into data. So, thinking through that lens, we are thinking and we are hoping that our fix and flip and our wholesale, and again, it's investment, but it's a little more on the residential side. We do small commercial, but we're not doing big commercial things. Will normalize a little bit. It will lean back towards being a little bit of a seller's market, but volume will return. We came out of, some nice steady growth from 2015 through 19/2020. Then the insanity of COVID happened, which was completely unsustainable. And then we had that major, major correction, at least in our world in 2022, where hedge funds stopped buying, prices definitely came down, interest rates went through the roof in a short period of time. So I think it's weirdly getting back to the new normal, which is essentially what it was in 2018 and 19, which were healthy years, more volume. We want to flip more properties. We want to stay in our bread and butter of close-ish to median home prices. So for us, we like to buy between 400 and 600, and we like to flip between 600 and 800. Like I get lucky once in a while, I get something cheaper. I gotten burned recently on 2 properties that are over $1 million. So we want to get back to our bread and butter and do a lot more flipping on behalf of ourselves and our clients. Definitely build out the agent side. This new aspect with DXP has been really enlightening. We were with another brokerage and they were fine, but it didn't give us the ability to expand, especially across the country. So building these partnerships where everybody wins and there's a cool revenue share component to that, where you talk about financial flexibility in the future, is building that out so we can have some residual revenue share and help our folks build their business. Definitely love the co-work space. So maybe pick up one more of those. We know so much more now, which has been great. And then just being sensitive to our time. So kind of seasonality of life, when before we did an apartment syndication and I was the general partner and I put in tons of time and I was traveling 8 to 10 times a year to Cincinnati. I don't really want to do that right now. So being smart about who do we team up with as limited partners and let other really good, smart people run as the GP and diversify a little bit. So that's where we're trying to go. Is we still, I call it building an empire, but the empire is just a life design the way that we want it to be. And I never want to retire. Like I'm never the guy that's just waiting to play golf. Like I just love what I do. I want more vacations and I want more people to help me run these things, but it's just designing that. So that's what we're trying to create for the future and somehow suck our kids into real estate a little bit. Might not be accurate, but just to have them understand. I didn't get into my mid-30s. So if we can help them house hack, charge their roommates, do an Airbnb, like build this wealth and do whatever the heck they want to do. I don't care what they want to do, but have this as the backdrop. That's what we're hoping to work toward.
Beautiful. Love the vision. Good luck with the children. Our daughters are not accepting of, but they love our lifestyle. They're like, wow, how do you guys do all that? And the perks that come along with, being able to support them in their endeavors, but they're both just jumping into the W-2 world. So yeah, all that's beautiful. I like that. I share your view of never wanting to retire. I just don't want to have to work, right? I want to be able to do what I want to do, to steer businesses and give guidance and mentor and do those kind of things. It's all beautiful. Why
Love
don't you close this out? And
Derek, we like to end each episode with gratitude. Do you have any people that you want to shout out to that have been instrumental into your life and your journey until today?
Ooh, that's a good one. I've actually never been asked that question. And I really like that. This could be a very long and whole nother episode.
yes,
So
yes.
I think Yeah, there's so many people in my life that I'm grateful for, but I would maybe take it back to the beginning of the episode, which is I had my father-in-law who was this great real estate investor guy, and I had my dad who's this great Wall Street guy. And so just those two people pouring into me like gave me just this cool background that I never thought that I would have. So I'm super grateful for both of them. Of course, I'm, grateful for my wife and my kids, which is kind of a no brainer as well. But then I'm also grateful to that woman Diane who got me into this from CBS. And I think I feel bad. I haven't talked to her in a while. She Florida and is doing really well, I think, on her own and still doing real estate. But Diane was a total mentor because she took me under her wing, kept me out of the insanity of media sales, and I didn't get too worked up about it and got me into real estate. So I think those people I'm super, super grateful for. And then just our team right now, Adam and Travis, our other full-time folks and all of our agents, I'm really grateful for them because they're doing a great job in a challenging market. And so, yeah, a lot of gratitude.
Love it. Well, we're certainly grateful for you for spending some time with us, sharing some wisdom, hopefully inspiring some people to entrepreneurship, to real estate, investing. It's so powerful. It's such a great way to find freedom. It's a healthy market. It has its ups and downs for sure, but I don't know, for the next 5 or 10 years, it's hard to foresee any macro factors that are going to significantly slow it down outside of big world events or something. But yeah, really appreciate the time you spent with us and look forward to seeing you again sometime soon.
Absolutely. Thank you so much for having me. It's been so fun. Thank you.
Last question. If anybody's interested to reach out, if they are interested in your program and what you do, what is the best way?
Absolutely. So the simplest is first off, it's our website, which is just elevationinvest.com. That has tons of information. They can search at Elevation Invest and then it'll pop up all of our socials. And then our podcast is called Raising the Flipping Bar. So if they just search on any of those 3 different platforms, they should be able to get to us. I'm happy to connect directly with people and really get them assigned to folks on our team to help. And those 3 things are probably the easiest way to get hold of me.
Great. We'll get that in the show notes as well. Well, thanks again. And we wish you and the whole team all the best.
Absolutely. Thanks to you guys as well. I really appreciated our time together.
Thank you.
Thanks.
For those of you joining us today, we hope you enjoyed this time in the Champions Corner as much as we did. Got some awesome takeaways, and most importantly, will take action to continue living your best life and maximizing your potential. Mindset is such an important aspect of life, and when coupled with action, delivers undeniably powerful results.
Please subscribe to the podcast to hear from more great guests and get the latest mindset mastery insights and cash flow matchups.
Again, thank you so much for investing your time with us, and we look forward to seeing you next time on the Cash Flow Fight Club podcast.